Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket. But if you can make your client's money at the same time, it's advantageous to everyone, correct? No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Hi guys, welcome to the Greedy Trader channel. Well, I'm not exactly greedy, as most of you old watchers of the channel will testify. I have the most conservative approach to trading. It's just a nice parody idea from the Gordon Gekko mantra. There are only two kinds of traders, the greedy ones and the fearful ones.
Greed, for lack of a better word, is good. Greed is right. Greed works.
Those of you who are new to the channel, this is where you can learn how to really trade like a professional. Every video I make is packed with real examples with before and after scenarios, so you can see that it is simply a question of sticking with the plan, not changing it because you're having an emotional meltdown.
No!
Hello guys, welcome back. I'm going to make this one pretty quick. Thanks again for you guys all tuning in. It's always good to see all you guys here, and I really appreciate it all from the bottom of my heart. Again, just to show your appreciation, if it's the first time you're coming here, I totally understand. You're going to look through these videos and you're going to finally discover what it is I do here. But if you've been here for a while and you haven't subscribed, you know what to do. You know where the like buttons are, where the subscribe buttons are. So as the title says, why this always works. That's what I'm going to talk about today. Right. So again, if you don't know what all of this is, you're looking at my screen for the first time. Well, people who've been following the channel know what I do. I sell option premium. I trade everything from futures to spot. So I'm an all-rounder. I've had a speciality in cable for a while, so pound futures as well as spot FX. I do a lot more now on commodities, I do a lot more now on equities, and I definitely do a lot more option premium selling. It's a good way to generate income. If you don't know what that is, you can just go back a few videos or join the Discord server. I'll leave a link in the description below so you can check it out. So why do I do that? Why do I do all of this, and why does it always work? Because I've got a way I go about things. Point in case, I've got... So I'm short calls at the moment. Let me drop this to a 5-minute time frame so you can get the picture. So as you can see, I'm short calls. I've been selling the calls all week. I typically don't sell calls, but as you can see, pretty interesting market, and I've had to hedge out some of my PayPal puts, which I talked about in the other video, so I'm not going to go back into that. But ultimately, long and short of it is our short calls covered some contracts, covered another couple of contracts, short again, and obviously as you can see, this market's completely crushed. Calls are now 14 cents, right? Sold them at, well, the last transfer is just over $1. I like to keep my premium sales over $1 where I can. I don't always trade close to expiry. I do like the 2 to 3 DT, but with these markets, you need to go further out. You need to go further out on the calendars. Perfectly fine. You collect more credit that way, but also you're at the point where the decay curve is accelerating. And don't worry if you don't know what I'm talking about. Like I said, join the Discord server, and I post regular updates about options. I do videos as well. I'm primarily a put seller, but obviously markets like this, I can be a bit more dynamic. That said, these calls that I sell, they're going to be covered to a percentage anyway, because I hold equity portfolio. I hold an equity portfolio, so I hold stock as well. And AMD is one of the companies that I'm holding, so it's not a big deal. As you can see, I've done all right on the calls. Now, the question is, right, and I'm going to show you some additional value as well. So I'm going to talk a little bit about what I know a lot of you guys do, which is either trade futures or trade spot. And I'm going to talk to you about how I do this, so it generally this method of doing things always works. It works in the sense that it gives me process, it gives me consistency, because a lot of people can trade, right? They can pick positions, but they're not consistent. And that's the thing as a trader we're all trying to overcome, right? I've mentored a lot of people, worked with a lot of traders, and the truth is that most people are pretty good at what they do in terms of being able to analyze things and pick things. What they can't do is do it repeatedly, because it's pretty hard to do something in a discretionary way repeatedly without nailing it down into some kind of a system. I'm sure we all can agree, because pretty much a lot of people are going through that loop. So essentially, how did I fix it? In other words, right, market's about to kick off in about half an hour, so I'll keep this short because I need to look at my positions and do my business. Fortunately, or fortunately, YouTube is not my primary source of income, so trading is. So I've got to pivot, sadly, and I've got to leave you guys, but let's keep going. Right, so ultimately, it works for me because there are a couple of things that I do. So for example, I know, right, so typically I might pull up, so let's take the 104 calls, let's grind it into a longer time frame, right, and let me spin this up into the chart, right? So typically I know the calls lose value over time. It's pretty easy for anyone looking at this chart to see that from February the 5th or 4th of February, when these calls were technically somewhere in the money, they've declined. Obviously you're not going to sell it in the money call. People do it, but you could get exercise. If you've got the cash risk to cover that behavior, then not a problem, you could. And if you get exercised, not a problem, you can cover the cost of the shares. Or if you already have a portfolio and you're just selling calls against them, then you get exercised, the shares get called away, you get cash, you can buy new shares. So it's not a big deal. That's one of the beauties about the option market, is it's very diverse. This video is not going to be entirely about options, but I want to give you an idea of my mental process in any market that I go into. Again, I'm just a humble trader, so don't have to listen to me. You can listen to the talking heads. Talking heads always got stuff to tell you. They've always got fancy stuff to show you. They've always got this little trend line here and there and all that business. And they all got fancy names. ICT, SMC, KPD, JPC. They got great names, and that's fantastic because it's the age of social media. But on the flip side, doing the business is pretty hard, and I've got a video about that. Again, just go for the channel. Why is it so hard? This is a tough business. So going back to it, why it always works, right? So again, I can see that the calls lose value consistently, right? So there's a pattern here. It's something I can repeat. So if I know the calls always lose value, then I can set up a repeated pattern that I can take advantage of every single time I see these calls do a specific thing. I can start to get data on volatility. Okay, these options are impacted by volatility. What's the typical volatility? What causes it to expand? What causes it to decrease? What's the effect in the overall option? You can start to put that into data. I'm going to have to collate this data over a period of time, and that's the hard bit, is because for maybe 2 or 3 months I won't be able to execute anything other than test the data. I can even do a small account size to do that, and I've done that for pretty much every asset class I operate in, and that's how I'm able to develop systems that you don't hear about anywhere else. So what I teach you, other people won't teach you, at least not in the way I do, and even if there's some idea of it, they just won't teach you because they just don't have it in a cohesive, consistent way, which is what I do. I package it that way, and you can see that. Again, one of the cool things I've done is, I'm going to put that in the description link below, is I've got a free course to start out a beginner. If you've never traded before, you can start with a completely free course so you can get some of the basics down. And then I've got a really, really cheap Udemy course, right, that I'll post a link to as well. It's like super cheap, a couple of quid most, right, because Udemy, everything's cheap. That was the point of it, is to be able to provide you something like this at virtually zero cost, right? And then of course, if you you wanted someone to mentor you, or you thought I was that person, then you can reach out to me, not a problem. But initially, I'm going to give you as much as I can give you for free. I think that's important. So I'll leave links in the description below. And then that kind of takes you to a stage where I'm fairly confident, all right, that you're going to be, in fact, I'm very confident that you're going to be in a really good position, at least as a new trader. And then you can start to sort of beef up your performance, because I am all about performance management. That's what this business is about. You'll be able to develop your performance. The more confident and consistent you get with these ideas, the better you can trade. And that's the reality of it. Anyway, I can see that. So that's an example there of something that's consistent. All right, now let me spin off this for a second. Build your trading career with the Fivers, where opportunity meets quality prop trading. The Fivers is one of the oldest prop firms in the business, with over 9 years of experience funding traders. Join a select group of top traders and access funding up to $4 million, empowering you to trade with confidence and scale your trading business. Experience exceptional trading conditions with low commissions, tight spreads, and the freedom to hold positions overnight or over weekends. Accelerate your trading journey with their hyper-growth program, doubling your account size at every milestone, propelling you towards your financial goals. Join a vibrant community of successful traders. More traders have succeeded in keeping their Fivers funded account than any other prop firm. Benefit from their reliable payout policy, receiving profits with a click of a button, ensuring you reap the rewards of your trading prowess. Unlock trading capital with sensible rules by joining the Fivers. Sign up using the link in the description below. This supports the channel and our sponsors. Do it now. Right, so let's take, for example, an asset class. I posted this in Discord just today, actually. But again, something that's repeatable. So for example, we always talk about the value traders, market profile traders. As you can see, this channel's a lot to do with market profile, because it's one of the primary ways I look and assess the market and build repeatable patterns that anyone can use. So for example, value trade, that's really common. So I'm just going to take, for example, just the first couple of weeks. This is a weekly profile, right? So do take a slightly longer time horizon approach, but again, we're looking at 4-hour rotation. So what I'm able to do with a profile is to take those short time frames, condense them into a bigger time frame, and then see the market from a more macro perspective with these shorter time frames available for me to trade. What do I mean? Split it up. You can see this is gold. That's typically, I was talking about that today, is that gold for most people looked like it was going up. And I was saying that, what do I always say? Don't pay up. Right? What you don't want to do is pay up, because gold is obviously taking a responsive buyer. It's moving now through value. And that's what I wanted to talk to you about, is value. So don't pay up because you see gold building and then you think it's going to go higher, because you're paying a higher price relative to the people who bought the value low. So what's a value trade? It's really simple. It's a 70% probability trade that you trade from value high to value low, or value low to value high. Right? So you want markets to do an excess and then reclaim its value, and then it more than likely 70% probability is going to trade through value, right? Like all the old style proprietary trading firms that were on the streets, and whether you're in the US, in Chicago, or you were in London, there were a lot of prop firms, especially around that Monument area for the people who live in London. And all those guys would go to the office, right? And this is the strategy that a lot of them would trade. It's value trade, because the easiest thing that you could get a new trader to repeat consistently. So all you had to do every day is turn up, look at the market and think, okay, where is it? Is it value low, value high? Is it at an excess or not? And if it reclaims value low, I'm going to go short. How you manage risk against that could be done in different ways. It could be position sizing. So you could, for example, you could sit there and say, well, I'm going to position size. If I short a couple of contracts up here, I'm going to size them to my dollar risk. Maybe I got $1,000 to risk on the day, 5,000, 500, whatever that number is, right? You'd position size it against that particular position. Maybe you want to be able to take 2 or 3 trades in a day, and you're going to be able to position size it accordingly so that you can fit in those trades across your total max loss figure, right? It's kind of the model the online prop firms have kind of adopted to kind of give themselves a bit of an edge, is that, oh, by the way, you've got a max loss, or you've got a max daily drawdown, or whatever the case may be. In the old days, it was just you got max loss, you've been allocated a max, some kind of capital to work with, and of course you've got a risk manager. Really straightforward. So, you position size it. Right? That's one way of doing it. Or if you prefer to get a bit more leverage in, tight stops, you're a little bit more confident, then you can pick a level. So it's really simple. You might pick responsive seller, responsive buyers down here. So this is clearly a range. You're trading value high. Your dominant strategy is to sell. That is your dominant strategy because you're at value high. Right? So you can do this repeatedly without, you can code it into an algorithm even, but you can do it repeatedly. Right? So you go, if you're available to trade, this was, again, like I say, this is a weekly profile. So you'd have seen this on a Monday, for example, and you thought, well, I'm going to trade this through the week on a Monday, and if I see an opportunity at value high where the market accesses and cuts back, then I'm going to do a short. What did I say to traders on my Discord? Again, the link's there, the post is there, so I'm not just saying this, and you can see the times and everything else. This is what I do. Again, I said, if we are under that LM period, then you want to cut short, right? And then you want to go for a value trade. That's a safe one. Again, as we start to push the excess, that's where you want to get involved. A bit more risk to this because you're just about excessing and you're anticipating the value, the push back down ahead of a major session open. Or you could wait for it, in which case you get a bit of volatility. I'm sure you get a pretty decent execution regardless because you're value high to value low. If you look at what's in this move, so let's say you even managed to see the break, you cut back a little bit on bids or on offers, and then you move down. It's about a 13-point move. Who doesn't want a 30-point move in gold? And then you walk away, you're done for the day. Why do you need to touch this thing again? Like I said, the people who design this market, they have no good intentions for you. They did not make this for you or even me. They made this for themselves, right? You think if I could build a black box that I would want to let you profit from that black box? Hell no. Hell no. All of that money is coming to me. That's just how it's going to go down. It's up to you. You can put your money in. It's like it's the world's largest casino, right? There's a bit of an edge here, of course, than an actual casino. But the truth of the matter is, I'm not going to want you to take a penny away with you. That's just the reality of it. So again, this is something you've got to bear in mind, that whoever made this didn't want you to get anything from it. That's why you've got to play the market in a repeatable way so that you've got that little edge that you can secure. That's what edge is. It's just finding something that you can do repeatedly and then you can turn a P&L. Now you've got to do it repeatedly so you can collect the data. It's something I do, and I've got spreadsheets for months and months of data. So generally I would say a good data test is 3 to 6 months. If you can get 3 months where every month you were turning over a good P&L, then what does that mean? It means you've got a buffer. So it doesn't really matter at this stage. The market's already in your favor. It's up down to you to lose that buffer. If you get 1 month where your P&L, say for example, is negative, then it's a bit like, okay, how negative is it? If you have a month where your P&L, you're doing something repeatedly and consistently and your P&L's like $5,000 this month, and then next month the P&L's like minus $4,000, there's something wrong with what you're doing. It's clearly not consistent enough. But if you say you had a good month, maybe your month is $5,000, 6, 10K, whatever it is, and then the following month you got 5 or 4, that's not a big deal. You still turn green, and you'd have had some negative days in between, but overall your monthly P&L is positive, and that's what we're aiming for. So, but it needs to be repeatable, otherwise you're never going to have the data, and then you're always just going to be swinging for the fences, and that's what we don't want to do. So by and large, it's a value trade, and it's all sorted. I walk away. We can see the same example. That's today, and we're going up again. So if I split this for another value trade, so more than likely we're going to retest the value high again, and bet my bottom dollar we sell off. And if we don't retest that value high, then there's no reason to get another short in. But if you want to risk, again, if you wanted to do that, you don't need to put your whole capital you just made. You can put 50% of it, 25%, just to see if you can skim a little bit more off the top, and then you walk away for the day. There's no risk on it. You're still positive equity. You put some back in to play. It's like poker, right? Put some chips in, not the whole freaking pot, for God's sake. Anyway, so again, no way is it that easy. I've got another video on that. Of course it's not easy. It's easy, but it's hard. It's easy because this is easy to repeat. This idea is something you can take. It's hard because your mentality is probably going to get better off you. And that's why I always say people need mentors. They need people to help them through that performance stage, even if they know what they're doing or they think they know what they're doing, because I can guarantee you, your head's going to get the better of you if you've got no one holding your hand and saying, okay, what is it that you've decided? Giving you the foundation, holding your hand. Anyway, another story. Here's another one. Here's another example. Here again, we accessed on Monday. We started to cut through, sort of about G period. Again, you can do a short above the responsive seller, single print. We know that already. I've got a lot of videos on the channel on market profiles, so really, no one should be asking me what's a single print. In any case, we cut back through value again, nice and easy. What's that? It's about a 10-point move. Okay, if market went down, I'm not chasing downwards. I don't want the whole thing. The idea is that value trades 70% probability, which means that I'm going to get an awful lot of trades right, and ones that I get wrong, I can offset them. And this is something I can put on data. And let's actually look at this last one. Right, it says the inside value open. We push towards value low a little bit. It's a wider value area, so it becomes a good long. We start the base. Again, we want to stay long till value high. So let's say we bought here. Again, we need to be able to cover some distance. So personally, it might be an idea on a major session open, and look where we're trading. If we're near value low, it becomes a sitter of a trade. 17 points. If this thing cuts back to the high, I'm not even looking for value high, just back to the high of the week, that's about 24 points. Okay, it's not 2-to-1, it's not 3-to-1, it's not 4-to-1. The bottom line is, it's repeatable. You can keep doing it, and that's the thing. So this is, and of course there are going to be days where you're completely out of value. We don't reclaim value like this day. Instead, we take prior value. That's another concept, another discussion altogether, how we can trade against previous value. So if you're a value-based trader, that's all you do is value trades. And you can do it repeatedly and then walk away. Do it against a weekly profile. I think a daily profile can be a little bit more noisy and awkward, but a weekly profile is absolutely perfect. 4-hour rotations, you got this. Anyway, guys, I hope I made sense here, right? And that's the point I'm trying to make. Right, that is all I'm trying to say. This is why it always works, right? Anyway, till next video, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket. But if you can make your client's money at the same time it's advantageous to everyone, correct? No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?